Everybody. Thanks so much for joining Collab's first investor webinar. We're going to get started. I'm Lauren Yeck. I'm the marketing director at Collab, and I can collectively say on behalf of the whole Collab team that we're very grateful that you're here. So whether you're a seasoned investor or you're new to real estate investing, this is an exciting opportunity, and we're going to dive more into the dynamic landscape of student housing. We've got some incredible speakers joining us today. We've got Jack, a lifetime Bay Area resident with a 28-year proven track record of success, who is our business developer. We've got Eileen, who runs our acquisition department, who's got 7 years of experience in real estate accounting and has managed a $2 billion real estate portfolio. Bay, who has over 15 years of expertise. He directs our product and marketing. He's the go-to guy for marketing strategies in this industry. We've got Gareth, our system product director. He's got over 16 years of experience in leading development applications. And of course, we have our founder, Chen, who has over 22 years of experience in residential properties from China to the United States, and he will be leading us through this webinar. Just a quick agenda on what we're going to be going over in today's webinar. Collab introduction, we're going to go into our investment thesis, and we have a few property highlights as well as some big milestones that Collab has accomplished since we started. And for any questions that you may get during this webinar, we have our Q&A chat box window open. So just go ahead and submit your questions there, and we will we'll note these questions, collect them, and answer them at the end of the webinar. Alrighty, so here is our founder, Chen.
Thank you, Lauren. Hello, everyone. Welcome to our Collab's first investor webinar. Before we get into the specific topics, I would like to take this opportunity to share the driving force behind founding Collab. I'm standing here today not just as an entrepreneur, but as someone deeply passionate about real estate and innovation. My journey in this field began in college, where my studies in architecture laid the foundation for my future. The path has not only granted me financial independence before turning 40, but has also provided immense satisfaction through contributing value to our society. Over the course of my 20-year career, I have founded over a dozen of startups, embracing entrepreneurship as a lifestyle. It is not just a career choice for me, it is a necessity, a source of daily excitement and fulfillment. I thrive on the challenge of solving complex problems and creating new business opportunities. Innovation in real estate. With today's rapidly growing technology, the real estate industry, traditionally marked by incremental advancements, has been ripe for disruption. This became even more evident when the COVID-19 pandemic unexpectedly upended my previous business model. However, in this crisis, I managed to find an unparalleled opportunity to rethink real estate fundamentals, leading to the creation of Collab Home. Collab Home to me is more than a company. It's a vision. Our goal is to revolutionize student housing real estate to maximize value for both our investors and tenants. We achieve this through an innovative approach to vertical system integration, ensuring that every aspect of our operation aligns with our mission of providing exceptional value. Community-centric approach. Our ambition is to transform real estate management to adopting a community-powered, peer-to-peer business model. Imagine an investment and property operating system where we eliminate unnecessary intermediaries, akin to what Uber did for transportation. This approach allows us to deliver our professional, best-in-class products and services directly to our community. A key feature of this system is our commitment to transparency and accessibility. Every investor, regardless of their investment size, has equal access to detailed property information. This includes financial statements, leasing status, and daily operations. Our live property information feature on the product detail page offers real-time, accurate, and comprehensive data accessible at any moment. I'm very proud to say that we are the first and so far the only one who managed to offer this kind of level of transparency and accuracy information to our investors, to our community. Again, I deeply appreciate your continued support to Collab Home. I look forward to sharing more about our journey and growing this exciting and unique community with each one of you. Thank you all. Okay, I'm turning the stage to my team.
All right, thanks so much, Chen. Hi, everyone, this is Bei here. To give a high-level introduction on the Collab before we dive into the specific projects. So Collab has been building a very unique positioning to capitalize opportunity in the student housing space. With over 50 years of combined real estate experience from the team, Collab created the first regulated platform to focus on this student housing assets. So for the first time, anyone residing in the US, whether citizen or resident, can participate in the appreciation of this highly valuable and scarce asset. This is founded in 2020. In a matter of just less than 4 years, we have managed and grown our asset portfolio over 60 million and still counting. And across the portfolio, we have achieved on average of a 14.7 IRR across all the properties. Last but not least, with our first of its kind community-powered property management system, it ensures nearly full occupancy across the portfolio. So for all the participants here, mostly are already investors in the platform. You would probably appreciate the high occupancy, which will eventually play out in the future equity appreciation. Now I'll pass on to Jack to speak more into the operating model.
Thanks, Bei. My name's Jack. At Collab, we're not just real estate developers. We develop a student housing community. This slide says it best. We look for underutilized properties. We're pretty picky about which ones we go with. We use strategic partners to help locate, source, and scrutinize in specific targeted areas. We think exit strategy at the very beginning. We look to add value where we can. We add square footage, we convert 1-bedroom units to 2-bedroom units, we repurpose vacant commercial buildings to residential. Our goal is to add beds, be a close walk to campus, and to make our tenants want to stay our tenants. If we can't add significant value, it's not for us. Once we acquire a property, we qualify it through the SEC Regulation A+ for investors to buy shares. Collab's mantra is vertical integration with decentralized management. Our tenants play a major role in this. We pay our tenants to complete management or maintenance and repairs. We help them when they need it. It creates community. They refer us and they help us in the leasing. We have 99% occupancy. Our investors refer their friends and family. It's really an incredible synergy. Our goal is to maximize value at disposition. After renovations, full and efficient buildings, stabilized maximum rents, we reward our investors beyond just the dividends. That's our vertical integration with decentralized management.
Okay, thank you, Jack. So thank you for sharing the Collab introduction. And then my name is Eileen, and I'm excited to be here to share with you all about our strategic approach to expand our portfolio. So Collab specializes in identifying the student housing opportunities within the half mile from the top-tier universities such as MIT, Harvard, and UC Berkeley. We focus on the properties that have about 10 to 150 units with the investment size of 2 million to 50 million. So during the holding period of 3 to 5 years, we will add value to the properties in 3 different ways. The first is the capital improvement. This includes adding ADU and optimize the existing floor plans to increase the rentable area. And the second one is to enhance the operational efficiency through our unique community-based operation strategy, as Jack mentioned previously. And the third one is to use the alternative financing to obtain a low financing cost. So it can be achieved by seller financing, master lease to own approach, and making cash offers to secure the deal today and then do a refinancing when the mortgage rate decreases. Yeah, so in the coming year, Collab will continue to focus on the prime student housing markets in Massachusetts and California. We have established a strong expertise and resources to capitalize on these two markets effectively. Our existing assets in these two markets enable us to leverage a community-based operational strategy. By clustering the assets within the same neighborhood, we create a cohesive community environment for our tenants. So for example, tenant in property A can also help us with the leasing and repair and maintenance work in property B nearby. And most importantly, both the Massachusetts and California are home to many top-tier universities. And this makes the student housing a very resilient and promising investment opportunity. And starting from 2025, our plan is to move into markets such as Georgia, Texas, Arizona, Florida, Pennsylvania, and Washington states. Our targeted approach in the state is not just about expanding our portfolio. It's more about reinforcing a successful, community-driven model that benefits both the students and the investors. Next, please. Yeah. So after we understand the Collab's investment strategy, let's look at some specific investment opportunities offered by us today. The first one is 1742 Spruce, which is about 2 minutes walk from UC Berkeley and 5 minutes walk to downtown Berkeley Station. It has 10 units, with 9 of them come with a private deck or patio. In the coming years, we plan to convert 5 two-level units into 10 single-floor units to increase the rentable area. The unit conversion, together with the strong demand in the UC Berkeley student housing market, will potentially bring us a 21% increase in net operating income over the next few years. And we are expecting a 15% internal rate of return and 1.6 times equity multiple upon exit. And next. Another gem in our portfolio is the 2340 Hugard. Just a quarter mile from UC Berkeley, it's located in a quiet neighborhood, which is highly attractive for graduate students. With plan to add additional rooms in the studio and one-bedroom units, we are projecting a 27.8% NOI increase over the years. And we expect a 14% IRR and 1.7 times equity multiples. And next. And finally, we have the Buttonwood property in Boston. This property is located half-mile from the University of Massachusetts and 5 minutes walk to the JFK UMass T station, where you can take the red line to go to MIT and Harvard directly. And this property is fully remodeled in 2022 with access to private roof deck that offer a panoramic city and ocean view. With no need for capital improvement, we focus on increasing the property management operation efficiency. We target a 13% IRR and 1.8 times equity multiples. So now I hand over to my colleague, Jack, who will talk about the community growth program.
We're excited over the last few weeks to roll out our community growth program, where we can reward our investors with certain levels of investment with bonus shares. The idea being that it's easier to promote our community from within than to try to get investors from the outside. So we're hoping that our partners in this appreciate that, and we're trying to work with you to get you the highest levels we can. So if you invest $900 in a given month, you become a senior investor for that month, and you get 5.3% monthly bonus shares. In addition to that, if we go to the next slide, if you can't make the 900, for instance, on your own, then you can pool with your friends, family, or other investors that you can refer, and then we'll pull those together so we can get you your monthly bonus shares based on your investment. So, for instance, in this example, if you invest $2,000 in a given month and you have 6 referrals where they buy in at $200 each, Then your qualified investment as a team would be $3,200, and then you would get bonus shares based on your original $2,000 investment. And that way you can earn for helping to promote within. That's our true community working together. If we go to the next slide. And I'm going to take it over to Chin.
I'm going to quickly share with everyone the key milestones Collab has achieved and also our overall next year plan. Collab was established in June 2020, sorry. And by the end of 2020, we managed to take advantage of the COVID-19 pandemic to acquire additional 7 student housing properties near UC Berkeley. And by March 2021, we launched our first community pro or community powered business management system. Our tenants are able to use this system to participate in our daily property management. Several of our tenants have turned their, call center as a tenant to the profit center. So they basically make more money than their rent each month. And by December 2022, we acquired 1 property near University of Massachusetts in Boston and the one near Rutgers University in New Brunswick, New Jersey. These 2 acquisitions are aimed for testing our community-powered management system. It turned out to be a very good result. For example, in our Boston property, we only had about 10 tenants. We always have 1 or 2 who are willing to help us on the daily property management. For example, Terrence and Jonathan, they actually even volunteered to help us do the annual building inspection. So we provided them with a professional checklist, and they went through, they are doing it at the moment. They go through every item. They even need to go to every unit. To think about it, when we send someone from our, like professional team member or professional third-party inspector to the building, to the property, tenants don't like them. They don't like outsiders to get into their room, and you have to coordinate the time. And now with our tenants who go there and asking their neighbors to help, to coordinate, to cooperate for the building inspection, really for the safety of their lives, it worked very well. And in February 2022, we started the whole Reg A Plus crowdfunding offering process. Within 11 months, we managed to get our SEC qualification. So that was on the 18th of December, 2022. So by the beginning of this year, we started the first offering, which is 1742 Spruce. And by mid-August, we managed to bring 2 more offerings to our public investors. And this year in November, which is last month, we actually managed to start our to start the construction on our first student housing development project at 1773 Oxford Street. This one has a 24 units with 81 beds. It's right across the street from North Campus. So it's one of the best locations. So we're targeting spring 2025 occupancy. So we are again, expanding in this UC Berkeley market. And so currently we're managing 14 properties, including the 3 that have been offered to our public investors. Now, what's exciting on the crowdfunding platform is that now we have over 8,000 registered users. Especially for the past 3 months, we have been seeing very fast growth. The Collab grows by now 20 plus users a day. In fact, and also by 40 plus per week investors. In fact, today, I was just shared that we already have 35 new users. And now we have over 500 investors. We only had a little over 200 investors in August. So this past 3 months have given us, have shown a very promising momentum. Okay, now I'm turning this to Lauren for the Q&A session. Thank you.
Awesome. Thank you so much. Okay, so a few questions that we're going to go ahead and answer, and we're going to have our panelists answer these. One question that came in said, considering the Collab website, the subheader rental properties indicates that you've listed some of the properties to the public. Is the intent to both offer rentals and that are in turn the same investment properties on the same platform?
Yeah, as I shared, I can start with it. As I shared, this is actually the unique part of Collab system. We managed to vertically integrate the different aspects in asset management, investment management value chain. So we are we are managing or operating our properties on our own, so from leasing to daily operation and renovation. And we also offer, our product to our public investors. This is the only way I believe to be able to maximize property value, which is our, the objective on every property. And we believe this is the only way to maximize, to maximize the value that our investors will get. So the answer is yes. We offer, we do the vertically integrated approach. Thank you.
Thank you. Thanks for that. Another question that came in says, do you anticipate rental increases year over year at Spruce, Hillgard, and other properties? If so, what's your projected increase in the rental revenue in 2024?
I can take on this one. So yeah, we do expect the rental to be increased in the next few years, basically due to two things. The first is about the market, and the second one is about the product itself. So in the UC Berkeley market, right now, the UC Berkeley have an enrollment of over 45,000 students, and about only 24% of the students are accommodated in the dorms. So which means that most of the students have to live off campus. So this creates a huge demand for the off-campus student housing market. And based on the data that we see, the Berkeley student housing rent increased by almost 60% since 2013. And then the trend is projected to continue, and with an anticipated rent growth of about 10% in the next 5 years. And another driven point for the rental income increase is that about the product itself. As I previously mentioned, that we are going to do some capital improvement, like converting a 1-bedroom unit to 2-bedroom units and adding the ADU, so which could increase the rentable area and eventually increase the rental income. Yeah, so the answer will be yes, the rental income will definitely increase in the next few years for our properties.
That was such a beautiful answer. Thank you for that. So another question is there an exit strategy for these investments?
Yeah,
Jack, go ahead, please.
Yeah, so generally all the investments that we make, we have a period that we want to hold it. And then when it gets to its maximum value, then at that point we go to market and sell it or refinance it. And at that point we're able to get our investors cashed out on their investment and with a notable rate of return.
Thanks, Jack. Another question is there an expected inflation rate? If so, what is it?
Can answer that as well. Generally, inflation, that's something that can vary, but usually nowadays it's running about 3.3%. However, we worry about appreciation, and we try to increase the value in our properties by working with the space and trying to maximize the yield in the rents. That's where the true value comes.
Awesome. Another question that came in is, do you anticipate reopening Spruce for investments in 2024?
Well, Chirat, we just reopened it midnight when you were sleeping. You'll be soon today getting a email announcement. Thank you, by the way, for I know you like this property very well, very much. And just a little background, we finished the financial restructuring. We managed to further reduce our financing cost. So we're offering a better annual distribution rate to our investors. Now it's going to be 5.5%. And I think we're offering a little, incentive or bonus shares to investors who invest in this month as a little Christmas present. Thank you. Or New Year present.
Both and.
Or both.
Okay, so another question is can investors exit prior to us selling any of the properties?
I can answer that. At this time, no. However, we are looking in the future for ways to, before the term is completed, before disposition, to transfer the shares either to others or to buy them back. But at this time, no. However, if you have some sort of emergency or something that happens, just notify us. We got our email support@collab.io, and we take those on a case by case.
And Lauren, can I add to it? In terms of our exit strategy, we have 2 ways to exit. One, of course, is at a single asset level. Right? In this scenario, we are closely monitoring what happens to the market, especially the interest rate. What we all know, interest rate is real estate value is very sensitive to interest rate because it's a capital intensive. It requires leverage in order to maximize the equity return. I think interest rate will not probably sharply going down until mid next year, hopefully. And however, it is a great buyer's market. As long as we can find alternative financing, we can avoid using the high interest rate money alone. So that's why we're very busy right now to buy. The second way to exit is really to build a very high quality professional real estate portfolio. This is where a lot of our experience is based on. So we are intensively building this, working on this portfolio building in terms of the very focused asset class. That's why Collab is the only platform out there who does nothing but student housing, because we want to build a high quality student housing portfolio, sizable portfolio. I think it should be over $100 million and above. So that's the way for us. This is where we can offer value to our public investors. When we build the portfolio, we can have, we will draw the institutional investors' attention to look at our portfolio, and that's what they want. And of course, we have to provide a very professional property level operation. And I just share with you, I'm sure some of you already know that in late 2021, early 2022, Blackstone acquired the largest student housing investor and slash operator, ACC, at $12.8 billion. So Blackstone showed at that time, they started entering the student housing market. So looking back, I think we're in the right market, and we're, building a quality portfolio to add, to create value for public investors, and we're waiting for the best timing to sell our properties, either individually or as a portfolio. Thanks.
Thank you for that answer. So we got another question. Will you consider offering a fund that allows investors to invest in all Collab student housing properties in a single investment vehicle?
That's a good question. Right now, each of the properties has their own LLC, and it's pretty well regulated, so we can't do that at this time, but maybe one day.
And also, there's a reason why we started with single property offering. With my my experience is in working with institutional funds. So basically at the portfolio level or the fund level, I partner with them in the emerging markets, to build sizable portfolio, and their investors invest at the fund level instead of the individual property level. The reason why I decided to do the opposite this time is really to build the most transparent, right? The most community-driven system. And when we have limited number of properties, the portfolio itself doesn't give the value. The most value of a portfolio is really about the risk, the balance of the risks among the properties. That means you need to have enough properties. For example, 10 or 20 and above. And when the portfolio only got 3, it doesn't work that way. And we are now building our system based on individual, properties. And it's very easy for us, right, to create a professional portfolio, I just mentioned, and then we offer that product to our public investors. And to me, there are different type of investors out there. For people who are looking for safe, less risk, right, safe, stable income, they probably prefer to invest in a mature portfolio. And we are now looking for, investors like all of you here, who are willing, who have the basic knowledge in real estate, and who also already have the experience in online crowdfunding. As I talked to some of our investors, I learned that you're well prepared, basically, to invest at a single property level, and you can even make up your own portfolio. Now we're actually working on 2 more new offerings as we're speaking. Hopefully we can get, as long as SEC doesn't give us a hard time. You all know they're a different animal. So we have, we hope we can get 2 more offerings available for everyone here in January. So then we have 5 all total, and you can start playing with different properties, and you can make up your own portfolio. So this is, again, I would like to create a decentralized, autonomous organization with the help from everyone here, especially our investors and tenants. Thanks.
Thank you for that. All right, let's go ahead with our last question, and it is, do you anticipate working with Collab into it? Okay, so I know I'm saying that wrong, but do you anticipate working with other college institutions such as Emory, UGA, Tech more closely in the near future, or do you want to focus more on off-campus housing?
Okay, I have some answer. That's a very good question. Thank you. You're very professional. I'm willing to learn a lot from you, especially in this market. Yes, we know there are, you know, large institutional players. I even talked to some of their senior management team about the possible potential collaboration. I realized, you know, there are a few things that I think it may take some time, which is about the way to acquire, to manage the properties. Most of them are still very traditional, and also they work with still, you know, the universities, right? To they make the product based on the university's needs, which is a little different from a off-market or off-campus housing strategy. So it's a different strategy, and we are, you know, I think I'm very interested in working with this, you know, type of institutions to offer, you know, our product and services to universities. At the same time, I'm cautious because we don't want to go back to the traditional way of doing or you know, doing the business. So Collab Home actually is my first time to decide, you know, to focus on innovation instead of, you know, scalability to begin with. Yeah, in order to, you know, to create a disruptive value to the industry, and of course, the value we're building is for the scalability. You know, it's really to at the most efficient, you know, and in the most efficient and effective way. Yeah. So the answer is yes. We would like to work with, you know, these type of institutions, work with the college, different universities to build, you know, based on their need. At the same time, we want to make sure that, you know, we use our way to manage the investment and the property daily operation. Thanks.
Awesome. Thank you. Well, that is it for our Q&A. I do want to just thank again everybody for coming and taking their time to be part of this webinar. If you do have any questions that we didn't get to or anything that comes up, feel free to go to our website and check out our help center, where you'll see like our frequently asked questions. You might get your questions answered there, or you can go ahead and submit your questions to support@collabhome.io. Make sure you're following our social media and our emails so you can stay up to date with all of the new investing opportunities, promotions, new products, etc. So thank you again, everybody, for coming to our webinar.
Thank you, everyone.